Nick, hi, good morning. There's been quite a lot of research written lately on the demise of investment research. And that's really since MiFID II came into being back in 2018. Um, Yet your recent European equities trading study shows an increase in research spending. Could you explain your findings, please?
Yeah, good morning, Rod. Certainly. So based on our estimates, there has been a general decline in investment research spending post-MiFID II, as you stated, but that we estimate total spending for 2024 was a marginally increase of 3.2% after almost 9% decline in 2023 based on our calculations from the survey. So these figures are still well below pre-MiFID II. So we're still saying a general decline in investment spending, but 2024 in comparison to 2023, there was a slight marginal increase of say 3.2%. And these are our estimates based on when we look at how much folks are allocating to investment research and the European landscape in terms of equity volumes.
Okay, when we think about rebundling of research, it's come back. The UK took the lead back on the 1st of August last year, and I guess we'll see the European Union start to pick up on that theme as well. Mm-hmm. How do you think this is going to impact research spend among small, medium, and large funds? And will it positively impact the coverage of small and mid-cap companies?
Well, that's the million-dollar question, Rod. The hope is that it will increase research spending. As we stated, research spending post-MiFID II has generally been on the decline, and especially amongst the SME companies, where research spending basically took a nosedive as firms concentrated on the top companies. As a consequence of this research spending, we've seen that the growth of SME companies have also been on the decline. And then as a consequence of that, we've also seen IPOs kind of be on the decline. It's kind of like a vicious circle, because if I'm a private SME company and I'm looking at the market at companies of similar size to myself, and I'm seeing that lack of growth, what is my incentive to go public? So we're seeing a lot of companies remaining private, and we're seeing a growth of the private sector. So the hope is that by allowing rebundling, this will kind of kickstart research in these companies again, which will also increase IPOs. The downside to that, to kind of be a bit of put a negative on it, is that 59% of the traders that we spoke to at these funds prefer to remain unbundled. They prefer the freedom and autonomy that unbundling has given them, and be able to choose whoever they want to trade with, so they don't have to essentially trade with who's providing them the research. And surprisingly, it was actually the traders at the smaller funds that were more inclined to remain unbundled. So it's kind of, has the genie already left the bottle? Speaking to a number of traders have said that the unbundling genie's already left in the bottle. We're trying to put this genie back in. Hopefully it will make a difference, but it'll be a number of years before we may see any marginal benefits from the UK obviously going first. And then the EU last November have announced it in the EU journal that they can allow rebundling again. But then that's going to take time from going into the journal to actually being palatable on traders' desks.
And the last thing we should maybe touch on is trading channels. And certainly the study shows an enormous amount of trading commissions are being pushed down the high touch channel. How's that evolved over the time that you've been conducting these studies?
Yeah, so we have actually seen flow move away from high touch channels over the past several years, from about 34% to 29% last year, with flow routed via algos remaining number one over this time period. But despite this decrease in flow allocation to sell traders, the bulk of the European Commission wallet is allocated to the high touch desk. There has been an increase in fees by 12% over 2023. This rise can be attributed to liquidity challenges in Europe as traders try to find unique liquidity. So they're getting in touch with their high touch desk to try and find tailor or unique liquidity to, as saying, it's been challenging times in Europe over the last several years. So you're essentially paying an extra additional commission via going via these channels rather than your algo channel. So we're seeing that the flow, yes, has decreased to the high touch desks, but although this flow has decreased, they're charging a higher commission, which has led to the higher spending in the high touch channels.
Understood. Nick, listen, thank you very much for your time. It's a really detailed and interesting report, as is its US cousin. Would encourage all our listeners to have a look at it and pick through the data with you if they've got the time. Thanks again.